In the last video, we discussed self-insuring as an alternative to long-term care insurance. Now we're going to walk through three other commonly used approaches. The first will be relying on family. The second approach is moving into a reputable CCRC retirement community. And the third approach is relying on Medicaid. People, for many reasons, rely on different things. They do different things to help pay for their care. They don't have the cash to do it. A lot of people also believe that their family should pay for their care. And a lot of people do not have these discussions with their families. And it's something that people really need to put on the table if that's something that they're anticipating for their future. It's a very important conversation, and it's a very difficult conversation, but people should have that with their families. The next is going to a CCRC retirement community. CCRC stands for Continuing Care Retirement Community. These types of facilities have been around for a long time, and it allows people to age in place from being independent all the way going through needing long-term care for themselves. Typically, most CCRCs are going to provide levels of care, like I mentioned, from independent all the way to assisted living and all the way to the full-blown nursing home as well. The main appeal of a CCRC is if a person should run out of their funds, the CCRC will take care of them and help pay for their care and will not push them to the street. The CCRC, when somebody moves in there, they are going to do a financial and a medical review for a person, and some of them will typically require a fairly large down payment to move in. The big thing when you look at a CCRC is you really want to make sure that they are well funded, and most importantly, you want to have an attorney review those contracts. The big thing is you want to make sure you can also afford the down payment into that community. The next way is Medicaid. Medicaid is another way that people can rely on their long-term care expenses to be paid for. What most people don't realize is somebody has to be poor and spend down their assets in order to qualify for Medicaid. If that is something that you and your family are leaning towards, you need to make sure you see what the spend down limits are in your specific state and make sure that you understand what those are for your specific state. Now we'll look at the different options in looking into a long-term care plan, and we're going to look at a standalone long-term care policy.